let's just go ahead and get started. So what we're going to be talking about tonight, a lot of times if we do, or if I'm, doing some kind of a presentation like this, it's really just kind of like, hey, as I've been trading, this is kind of a new thing I found. I want to share it. This is where it's making my life easier. Just kind of stuff like that. But the theme with all that stuff has always been, just continuing to trade kind of a large account. Something with portfolio margin capabilities and stuff like that. And one of the things that, and I'll kind of talk about why and all that, but the idea is like, not everybody is trading an account that even qualifies for portfolio margin. A lot of folks, especially if they're just starting out, maybe trading like a $2 or $3 or $5,000 account, right? So, and I started thinking about this and just really wanted to kind of get back into that mode of, all right, what are some strategies that would work in a small account, and then actually setting up a small account and doing real trades. I want to show you guys statements, and then to show you at least what I think is possible in a small account. And that's just kind of what we're going to be talking about here tonight. Okay. And yeah, cooking with gas. Excellent. Yeah, I'm always curious kind of where people are coming in from too. I see someone is logging in from Perth. Where, if you just want to type in kind of your city, I know there's usually even some people in Austin. I got New York City, San Diego was just there, jolly old England, across the pond, Nashville, Miami, Milwaukee, Houston, Buda, Alaska, LA, Sydney, Phoenix, Austin, very nice, Hilton Head, a couple of Austins, Puerto Rico. Man, I would actually like to move to Puerto Rico for their tax plan. Magnolia, Toronto, Plano. I went to high school in Fort Worth, Ontario, Canada, Oklahoma City, couple more Australia, Jerusalem, very nice, Salt Lake City, Missouri, Lake Austin, very cool, Daytona Beach, that's great, Singapore, very cool. I think we may actually be going out to Singapore in May or June. Bermuda, very nice, couple Bermudas there. So yeah, I think that's great. Love it. Oh, nice. 10 miles from the boundary waters. Very cool. The hills. Okay, well, very cool. Well, that's good. Well, first of all, welcome everybody. It's always fun to have everybody in something like this. And oh, you went to Castleberry? I was at Southwest. My brother went to Pascal. Well, very nice. All right. Well, let's dive into this then. So, I mean, really, what we're going to be talking about tonight is kind of, the struggle. And a big part of this, for me, is just kind of remembering the journey of when I started. All right. You're trading a small account, you got enough knowledge to be dangerous, but maybe just kind of missing out on a few things. And so this is what we kind of focused on. So first, I just want to ask a couple of questions here before we get going. So who here has been struggling growing their trading account or has had trouble just making trading work consistently? And if you just want to type in me, I just want to get a sense of like, how many people here are like, oh, this is great, it's easy, versus like, what's the struggle that's going on, right? And okay, so yeah, so I can see, and the thing about it is, and the thing with trading that I think it's really important to understand is that on, in many instances on the next trade, okay, on the next trade, we're all equal, okay? On the next trade, we're all equal. I mean, basically, you're going to either win or lose, right? But the difference between being able to do this for a living or not is if we did 100 trades, who would be out on top, right? And so, and that's a concept that's hard for people to understand, because on the next trade, it doesn't, there's really no edge on the next trade. On the next trade, if it's your first trade that you've ever placed, you probably have just about the same shot of making money as someone who's been trading for 20 years. But the real test is after 100 trades, where do you stand, right? And that's where the skill set comes in. And at the end of the day, it's really what kind of separates the wheat from the chaff. Is that how it's called? But it's tough. Trading is the easiest, hardest thing in the world, but the bottom line is it's tough. And for every one person that finds a groove and makes it work, there are 10 who are struggling. And the ones struggling, and this is the really crazy thing about this, the ones struggling are usually working harder, much harder, in fact, than the ones who are consistent. All right. And so it's kind of an irony. It's like the ones who are working the hardest and staring at the charts the most are typically also the ones struggling the most as well. And the ones who are really consistent and got into a groove actually don't even really pay much attention to the markets. So, it's kind of ironic there. So Yeah, not unlike corporate life. So the idea of making the markets work for you becomes even tougher when you throw in the Fed, you throw in the algos, and you throw the black box systems into the mix, okay? And what works today, in many instances, for setups that you might read about in a book, printed a couple years ago, may not work tomorrow. And that makes trading hard, okay? And especially if over the last couple of years you got used to these nice little uptrends and buying the dip, well, then December came along, right? And then from there, just about the time it bottomed out, when everybody assumed that was going to roll over and die, we had this ferocious rally. And so the idea is being able to be consistent, whether you're trading in this environment, you're trading in this environment, or you're trading in this environment. The environment should not matter once you have those key kind of concepts and key tools in place, and you learn how to, it's just different, because with a small account, you've actually got to spend a lot of time on things like account management, where, if you've got a larger account, you're not as concerned about that. You're just focused on the next trade. So which makes this even more interesting. So, a lot of times, especially if you've been struggling with this, and if you have people in your life that are important to you and you've been sharing your frustrations with them, they might just think you're crazy, okay? And they're like, why are you doing this? And you might even be asking yourself, why am I doing this? Okay, it's just like, it's just causing me pain and frustration. Why do I keep doing this over and over and over again? So I just kind of see, is this ringing true for anyone? Is this something where, as you've been kind of going through with the markets and stuff like that, is it something over the last 12 months it's been, man, this is fun and it's easy, or it's just like, man, this is insane. I don't understand why this is so hard. Yeah, ding, 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 ding. Okay. So yeah, are you spying on me? Yeah, and the thing about it is, what's frustrating about trading is that just about the time you're ready to throw in the towel, you might have a couple of winning trades, right? Because remember, that 50-50 shot, no matter what trade you do, you got a 50% chance of making money on it, basically just like a coin toss that way. And so, just about the time you're giving up, you might have a winning streak, but then you give it all back. So that's the kind of stuff we want to talk about. Yeah, what's interesting, JD, is that you get a couple of successful trades, and then it builds up euphoria and overconfidence, and yeah, that's when the face slap happens. So, I know for me, I struggled for 8 years to get consistent. I was working full time, out of college, and I almost threw in the towel a couple of times, like for real. I'm like, why am I doing this? And this is my old trading office. I used to trade trying to balance. I figured if I could balance on the ball, I could balance in the markets, right? But once I learned what really drives the markets, and I combined that with a specific methodology for small accounts, the game changed for me, okay? And then from there, I went on to grow my accounts, and then my methodologies changed as my account grew, okay? And I look back and realize that the 8 years of struggle was worth it, but you know what? It still sucked. If there's any way I could have reduced that down to a year, I would go back in time and would love to do that, because that was a real, pardon my French, shitty 8 years trying to having those ups and downs and the euphoria of, wow, I've made money and I could quit my job, to despair of wondering, am I going to be stuck in my corporate job all my life? Am I not going to be able to make a consistent source of income from doing this? And it was frustrating. My wife, my fiance, it's funny how I met my wife is I met her in college. And as we're sitting there one day, she's telling me about this $20,000 in financial aid money she had sitting in her bank account. And I talked her into letting me trade it. And so here's 20K. And at the time, I was going to Investors Business Daily conferences. And so I was using the canceling method. And so I put her money in a stock called iOmega. And luckily, because this obviously could have been a disaster, the iOmega shot up. And I remember this so specifically because it went up to $35 a share, and I got in like at 11. I mean, it was like amazing, or $6, $7, $11, and I had a stop loss. And this is when there was fractions at 18 3/4, and it came down, hit my stop. I think it traded as low as 18 3/8, and then from there, split adjusted over the next 6 months, went to $300 a share. Now the good news is that $20,000 turned into $60,000. We got married and we have 3 kids, and we're still together. But of course, that could have gone horribly wrong. But I learned a lot of interesting lessons, through all that. But as I went through, that was not, that was a good trade, but that was not, at that point, I was still not consistent. But luckily, that trade worked. I got her money back plus, plus a rev share on that, and it worked out pretty good. Yeah, iOmega, those 100 megabyte hard drives, right? It was detachable, and it was, it's just like kind of crazy there. Yeah, I mean, that was my first really like aha moment trading. Like, wow, a stock can go from $5 to $300. Amazing. So yeah, they ended up getting bought, or I mean, it's funny because today, of course, I just ordered the new iPad. I didn't get the terabyte drive, I don't think. I got the 512 gigs. Amazing though, the memory. So okay, so here we are in 2019. Today the markets are harder than when I started, right? And the reason they're harder is just because there are so many computers and algos involved, and it makes things trickier because the old patterns get skewed. The old strategies in the books get taken advantage of, okay? But if you know what the computers are looking for, and if you understand what drives the markets, then this gets easier. Then it doesn't matter if it's a long uptrend. It doesn't matter if the market's flushing. It doesn't matter if the market has a V-shaped bottom. You can stay consistent through all of that, okay? So what I'm going to talk about here isn't theoretical. It's what I've really been doing. And I'm not talking about what worked last year, okay? Because, let's face it, last year from January to end of September, I mean, that was a pretty easy market if you were just buying the dip, all right? And if you were unaware that a market could change, October, November, December got kind of tough. But even more tough is once we hit that December 24th low, a lot of people I knew that had been buying the dip all through 2018 at this point were like, okay, I'm never going long again. And it was short, 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 ouch, 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 ouch. Okay. So remember, it doesn't matter what the markets are doing. You want to be able to have things where you can turn on a dime, okay, and alleviate pain and suffering and focus on building up an account, especially if it's a smaller one. And yeah, and you had the Trump tweets and all kind of fun stuff there. All right, so that's the stuff that I want to spend some time with you guys tonight and showing you this. John, is it true that it makes it difficult to double your account if you have a large account? So it doesn't. We'll talk a little bit about that, but it's a function of, a lot of times trading a large account is a function of psychology. Okay, so if you're trading like say a $5,000 account, your attitude towards it may be a little bit, well, it's money I can afford to lose. If you're trading $1 million account, right, your attitude, generally most people's attitude is like, well, I don't want to lose this money. So you naturally trade it a little bit more conservatively. But if you learn some safe, aggressive strategies, then yeah, the account size is kind of irrelevant. Now, there are sometimes when there are stocks that are very illiquid that with a small account that you can take advantage of that you couldn't take advantage of in a big account, but otherwise, you can utilize those strategies. So first question is why small accounts? Because, I like trading big accounts. If you're trading a large account, then for the same amount of effort, you might make a $10,000 or a $20,000 profit or more. Whereas in a small account, it's like for an effort, you might make $300, right? So, and so there's a reason why I kind of dove back into this and set up a small account. Well, first of all, I've been trading long enough that sometimes I forget what it was like in the beginning. And I'm conscious of that because when I'm on the microphone and I'm talking in the room, I'm setting up trades and people have told me this, and I kind of have like I just kind of do my thing, and I'm just kind of like I know, and I assume it's easy to understand, but I forget that if someone had just been starting out, whatever I'm talking about may not make any sense, right? So I was kind of like, okay, I forget what it was like in the beginning sometimes. And that the hopes and the dreams of a small account are much, much, much different than the hopes and dreams of a large account. The hopes and dreams around a small account are really geared more towards, wow, can I do this for a living? Can I build this up to the point where I could potentially quit my job? Or could I build this up to the point where I want to keep my job, but then the income coming off of this thing is substantial and makes a large impact in my life? And for most people, that means starting off with a small account and learning how to build it up, right? So, I spend time on the microphone and I'm talking about trades, and it's something I actually like to do. And believe it or not, it's a lot of people ask, well, why do you do this and trade? Whenever I'm on a microphone and there's 1,000 people talking, I get really, really focused. Like I naturally block everything out. That's the time it's easiest for me to focus on the markets. People, if I'm at home, Maria will leave me alone and the kids know not to bother daddy. It's great. I mean, you know, it's almost like a moment of peace. But I don't necessarily understand how useful the information is that I'm putting out unless I get feedback. And it seems like more and more the feedback I've been getting over the last 6 months has a very, very specific theme. All right. And what I'm getting is a lot of emails recently that are basically just saying, you know, John, please help. So this is an example. I get a lot of emails like this, and I just, for some reason, it just kind of started hitting me. It's like, hi, John, I have been a gold subscriber for a few years. I've got a small account, and I have a request for you. During the years that I've been a gold subscriber, I've never shown a profit on my account. The problem seems to be that I can't take your high-cost trades with a 10K account. The most recent example being data. I've had to pass on all these high-cost trades, and by high cost, he means like, you know, something that has an option that costs $25. Right, versus like a $2 option. And they all seem to take off and not look back. And I've been in touch with other small lot traders, and I ask you to consider to start trading a small account, perhaps 10K, and select trades specifically for the small account subscribers. And this email is an example of that. I received a lot of emails like this, and over the Christmas break, I thought, you know what, that is actually a really good idea. So over the December holiday break, you know, this hit me right between the eyes. And while I do enjoy talking about the markets and showing what I'm doing in my regular accounts, the reality it is that the people that we are serving, okay, a lot of them do have smaller accounts and they do need the most help. And since I'm not a fan of teaching by theory, okay, and feel that the best way to teach is based on actual experience, I opened a small account at the beginning of the year, right? And so what I want to do real quick is let's dive into that, and I'll show you the results of that. So, so this is my statement. This is our office address here. You can see that my okay, prior value. So this was January 1st, 2019 to January 31st, 2019. So my starting value here is $5,937.62, and my current value as of January 31st was $11,935.74, which is a return of 101%. And you could see here my portfolio makeup at the end of the month. I had long options, 62.5%, short options, 32%. And at this point, my cash was only 4.9%. Now, that's one of the things that I'll talk about later, but depending on the time of the month, you either want to be about 95% invested or 50% invested or 25% invested or flat, okay? And I actually time that on the time of the month. So there's for certain periods of time when it makes more sense to kind of load the boat on a specific non-correlated structure, which I'll talk about, but other times you want to pull back. And so we will talk about that. Oh yeah, no, we'll talk about losses too. And believe it or not, this wasn't something where there was like one huge winner or there are no losses, and I'll show you some of the losses too. So, and then, so how did that account do in February? So this is a screenshot. So the statements aren't out yet, right? But this is a screenshot from February 18th. Here it's $16,868. You can see that these are my positions. And at this point in time, like Beat was up $300, DXCM was down, Etsy was down, IBB was up, Roku was up, SPY was down, had open profits of about $1,000. And at that point, I was up about 41%. And then today, you can see where we closed, my account was at $19,860. So basically then I started off with, what was it, like $59.50, and then ended at about 19,800. So, you know, basically a nice triple, 100% in January and about, you know, 60%, give or take, in February. And so basically in 2 months, tripled the account. Now I'm going to plan on continuing to trade this account and continuing to grow it. That's the plan. But I just wanted to show you again, not theory, but real world examples of how to do this. Because believe it or not, when you're doing this, it's about what trades you don't take, all right? If you're serious about growing an account like this, you got to learn what trades not to take, all right? This is not about catching every move, playing Amazon earnings or anything like that. It's a very specific methodology where you're actually avoiding a lot of the market action for the sake of growing your account. Okay. All right. So first part of this is you've got to learn to manage your net liquidating value. All right. And one of the things I hammer in on something like this, because this is not something a lot of people think about, but your net lick moves a lot like the markets. Okay. So here's December 31st, first couple days of the year, I'm down, get some money, got a nice pop. Usually there's like one or two pops, you liquidate, and then it's like, then there's a drawdown, but your drawdown, basically, you got to think of it this way. Your drawdown, you don't want it to be more than like a 38.2% fib retracement from your swing high to your starting point. When I get there, you just got to close everything out, okay? That's it. You don't, this is not about target stop. This is about specifically managing your net liquidating value and your P&L curve. The only goal in trading is to have a P&L curve that goes from the lower left of your screen to the upper right of your screen. That's it. Nothing else matters, okay? You don't need to catch the latest Tesla move. You don't need to be locked and loaded for Priceline earnings. Your only goal is to manage your portfolio and set it up in such a way that you've got an equity curve that goes from the lower left to the upper right. And with a small account, it's even more critical because those big drawdowns are not sustainable for growth, okay? All right, so did I trade on margin? Well, I'll talk about what I traded. And I'm going to show you guys some, actual trades and stuff like that too. Jim, I love that. Yeah, 80% of the time not playing. Yeah, and that's one of the biggest things I noticed about this is that, it's really understanding when not to play, if that makes sense. All right, so the proof is in the putting. The putting. Wow. So the proof is in the pudding, right? So yes, I do remember what it was like to have a small account. In fact, I blew up 3 accounts when I was getting my act together, going from 10K to 120K-ish 3 times, right? And I got past that. And I talk about this in my book. I'm very open about, the struggles and, all the crazy stuff that I went through to do this. But what's more interesting is that my years of experience in trading large accounts, okay, has given me insights into better ways to trade a small account. Now, this is something that's kind of fascinating because when I was trading a small account, I didn't have the benefit of the years of experience of trading a large account. Now I've got years and years and years of experience of trading a large account, and I've been able to go back to a small account with new knowledge, okay? And that part's been a lot of fun. It's like, wow, God, I wish I would have known this when I first started out. Because while the setups are important, it's the overall process, okay? The attitude and workflow that makes all the difference. In most classes I've taught in the past, it's been about, okay, here's a new indicator that I like. I think it's really cool, and this is why, and I'm going to show you how I use it, and, blah, 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 blah. This is so much different than that because this is more about understanding the specific overall process, attitude, and workflow that makes the difference in something like this, in addition to specific setups. And there's 7 setups that I found that work best for this. So now that's a good question. How much time was spent researching the trades? I'll talk about that. Most of the time is spent discarding ideas. It's like most of the time is saying no. Most of the time is learning to say no. And then it's like, okay, well, how do you identify the ones that you like? And obviously we're going to get into that and talk about it. Yeah, no, for sure. And yeah, I don't mind, showing the trades and stuff like that too. So this is fun for me. I love trading, and I like helping people trade too. I don't know why. I mean, everybody's different, right? It's something that I enjoy. I think it's one of those things that somewhere along the way is that, what you learn best by teaching, or you get the most when you give, and that kind of stuff. And however the universe works, I just found that for me, that's been a positive. So this is fun for me. This is the kind of stuff I shared during my one-on-one mentorships when I used to do them. I don't do them anymore. But I used to do something where people would come and sit next to me for 3 days. It'd be $10,000. And this is the kind of stuff that I would show them because typically they would have smaller accounts. And if you can figure out how to grow a small account, bottom line, it can bring you freedom and most importantly, confidence faster than anything else in the trading realm. But if you cannot figure out how to grow a small account, well, there are not many ways out there to lose money faster. All right. And I see this all the time where somebody's new to the markets. They've got a whatever size account, it's irrelevant, $10,000 account, $25,000 account, $50,000 account, and they're brimming with confidence. And they don't understand that when you're dancing with the market, you have got to let the market lead. Okay. They'll die on the sword to defend their idea and they destroy their account in the process. So if you cannot figure out how to grow a small account or any account with these basic strategies, well, guess what? There's very few ways to lose money faster out there. So what are the goals of this? Discover how to grow a small account quickly. Okay, fully understand the methodologies that must be utilized to grow a small account quickly, because I mean, look, without those, it's just hopeless. You're just going to be banging your head against the table. And of course, these techniques can also be utilized on large accounts within liquidity constraints. All right, and we're going to talk about liquidity. But more importantly, it's really learning what drives market movement. Okay, and you can use this knowledge on small accounts starting tomorrow. All right, so I'm going to show you guys a specific example of this. So if you guys remember, this was last week, or maybe it was early this week, but it wasn't, it was February 20th, yeah. So this is fascinating. So what do you think about, a quick question there, Amy's asking, what do you think about scalping? Well, I personally am not a huge fan of it. And the main reason is because of the commissions. So if your highest expense as a trader is commission, so think of it this way. Say you got a $20,000 account and you're spending $75 a day in commissions. Well, that's $1,500 a month, and that is $18,000 a year. So if you're scalping and you're trading, spending $75 a day in commissions, that's $18,000 a year in commissions. So part of that is that scalping seems like it is safe, but generally people drive themselves into the ground because of the commissions, and then because the psychology kind of takes over. I always say if it's working for you, keep doing it. But I prefer, so just so you guys, just for a frame of reference, with a small account like that, with options, you can't scalp, right? So I didn't do any day trades. I averaged about 3 to 5 trades a week. And the average trade, anywhere from 2 days to 10 days. So just to kind of give you a frame of reference there. If you've got unlimited free commissions, and I just say again, if it works for you, great. A lot of times scalping though is, you're kind of getting in front of, it's like picking up pennies when there's gold, those $100 bills flying over your head. So, I would say, hey, if it's working for you, great. Okay, so let's look at this example. So I think it was, last week, February 20th. If you guys are familiar with college basketball, Zion Williamson, he's like a star player of Duke. He had this crazy instance where he slipped and his shoe fell apart, and it was a Nike shoe. Everybody saw it on live TV. And the next morning, this was the headline: Nike stock market value plunges by $1.1 billion after basketball star Zion Williamson's shoe breaks. Okay. And then you can see all through Twitter. I mean, I just took some random screenshots in Twitter, short Nike tomorrow. And there was, hundreds of people like, woohoo, gonna cash in tomorrow, short it, short it, short it. So what happened? And then here's another tweet right here where, and you'll notice right here, Nike is weak and headed lower. Okay. Now, if you look over here, that chart is right here. That's basically where he sent the tweet. Nike is weak and headed lower. Yet what happened is that it rallied. Okay. Why did it rally? And then here's someone, I still don't understand how Nike is at $84 after all this bad PR. Okay, so these are all examples of how the financial press and many individual traders, I'm not picking on these guys, there just happen to be ones I found, do not understand what moves the markets. Okay, so what moves the markets is liquidity. And this is a very, and this is, if for some of you, you may have heard of this concept before. For some of you, it might be new. But one of the things I'm really a fan of in situations like this is the monthly and weekly point of control, which is called volume profile. Because the name of the game now with hedge funds and algos and computers is liquidity. And they actually will move prices toward liquidity. So what happened here is it gapped down in bad news. All the algo said, the monthly point of control is right here. We need to move the stock back up to that level. All right. That's how the game is played these days. And if you understand that, then you're going to just stop watching the news. All right. You're going to stop getting caught up in all of that crap. So stuff like that is how, those are the kind of opportunities that in a small account you can look for and take advantage of. So yeah, it's kind of a reversion to the mean. Now, again, this is one thing that I use in small accounts. There's, 7 or 8 things that I actually like to use, but this is one where if you're trading a small account, it's a very critical thing to understand how the markets actually work, because they're working through computers, they're working through algorithms, and all of those algorithms are on the hunt for liquidity. And you can track where the liquidity is by looking at this, okay? All right, so that's the first thing. Now, the other thing here, and if you guys are familiar with Drunken Miller, he's got a huge hedge fund, very successful, Lost Tree Club. And this is an observation from him that I totally agree with. He's like, earnings do not move the overall market. It's the Federal Reserve Board, okay? I agree with that. Now, the second thing is that so he said here, earnings don't move the overall market, it's the Fed Reserve Board. But he continued, whatever I do, I focus on the central banks and I focus on the movement of liquidity, okay? And that's it. He's like, most people in the market are looking for earnings and conventional measures. It's liquidity that moves markets, all right? So all of the old school things that you may have learned about and heard about, remember, they're actually worthless at this point. If you find yourself asking, well, why is this happening? That's your first clue that you're on the wrong path, okay? There is no why. There is only a movement towards liquidity. So, so from there, well, so again, and it's just showing you, and it doesn't necessarily mean that every time there's bad news, you're buying it, right? It's just an example of how the markets work. And it's important that you guys understand that. All right, so part of this is just focusing on kind of key variables. Okay, there's key variables in the market that we want to be focused on. Now, the best traders are incredibly versatile. They can be short biased, but still capable of going long without hesitation. And at the end of the day, hesitation will rob you. Okay, hesitation to get in, and more importantly, hesitation to get out will basically rob your account. Okay. All right. So if you focus on key setups based on liquidity and then some of the other factors here that I'm going to show you that fit your personality and master them, then basically you can be profitable in any market condition, which is the whole idea of this. It's amazing, right? And again, all the stuff that I'm talking about, I have learned the hard way, okay? I'd love to say that, oh yeah, I've known this from day one. That ain't true. Lots and lots of pain and suffering. Well, and remember, most of the CNBC commentators talk about earnings because there's nothing else to talk about, right? It's like for them, it's like the Super Bowl. All right, guys, this is the big thing because they want to get you to watch. So here's another example. So VWAP. So monthly, we're looking at volume profile, VWAP. This is a very common indicator. A lot of people don't use it. But one of my criteria for longs is that the price, like CMG, okay, the price needs to be above the monthly VWAP all right? And I want to buy it near the weekly VWAP. And then from there, if I get a buy signal, great. And then I look at for it to go from there. But it's, basically what I'm doing here is I'm playing on the same side as the machines. All right. The machines out there are doing this automatically. And if you're not aware of it, I mean, look how this is contained, here. And it's contained from there. And it's fascinating because good news or bad news, that's what's driving this. Okay. That's what's driving this. So this is based on that. I put on this trade. And I did this in the small account. And I'll talk, position size and stuff like that is obviously important. But you'll note I've got a 5-lot trade here. Now, this is when the account was like $18,000. If it was $6,000, then on this trade, I would have done, either 1 or 2 contracts. So, but you position size as your net liquidating value changes. So on this one, so far it's good for about $500. Fantastic. All right. That's a great solid move. Now, for those of you that are new to options, this may look complicated, but basically, if you think Chipotle's is going to go up, you could buy the stock, okay, and it's a $607 stock. So if I was going to buy 500 shares, that would cost me what, $300,000? Is that right? If I have my math wrong, just let me know. Or you can do 5 options, and in this case, the 5 options took up $5,000 of buying power. And this is just a simple spread that gains value as the stock goes higher. All right, and that's stuff I'll talk about. And if you're newer to options, that can look kind of confusing, but it's it's something that you can learn in 10 minutes. Here's the other thing, okay, and this is the absolute key for small accounts. You should never fret over a big move against you, okay? A move against you does not have to be devastating. So I want to show you this as an example. Here I am in a small account, all right, and this is when my balance was around $8,000. I'm trading Amazon, for God's sake. And it's down, and I'm long Amazon. On this day, it's down $64. But you can see that on the day, I'm only down $57.50. Okay? With an open P&L of, I'm down $107.50. So Amazon, even though, quote unquote, I'm getting killed in the stock, I ain't getting killed in my portfolio. Okay? That's part of this. Is you've got to learn to structure your trades and structure your portfolio so that if you're wrong, you don't lose a lot, and when you're right, you clean up. Okay, because this isn't about learning to be right more. It's learning how to position your portfolio so that if you're wrong, it's not a big deal, and if you're right, you make bank. Okay. And then other things you can do too, and there's again some very simple things you can do with options. And again, I don't. If you're newer to options, this stuff's a piece of cake. I mean, I know it looks complicated, but don't worry about it. But one of the things with a small account too is that if it's bad, it can be good. What do I mean by that? So here's a trade where I basically want it to go higher, but what happens if the stock plummets? Well, this trade's structured so that if it in this case, this is a $7 stock, but if it would just get killed on some SEC investigation and drop to $1, okay, or go bankrupt, well, I'd make money on the trade. So even though I was long this, I could actually make money too if it went the other way. So the stuff like that, it's this way you want to structure it. So the other thing you want to do is rotate exposure depending on the time of the month. Okay, now not that time of the month, but you want to alternate depending on the time of the month, alternate between being 90%, 50%, and 25% invested. As an example, right now, I am 25% invested. It's not only the time of the month, but it's based on some specific internal indicators that I look at. If the internal indicators that I look at are favorable, great, I will go 90% invested. As they start to soften, I will drop to 50% invested. And if they turn where they are, frankly, right now, okay, I'm only going to be 25% invested. Again, this is a way to protect myself because these are periods of time where the uncertainty is higher. Great, I'm going to give myself less exposure. Okay, so you can see here at the end of, I ended January, I had about 47% cash for buying power. So that means I was about only 50% invested in these handful of stocks, or in this case, options on stocks. Yeah, I'll give you guys a copy of this presentation for sure. So the idea with this is just simple option strategies to give you an edge, okay? And I'm a big fan of scaling in, meaning that if you have a trading idea, there's no need to pile in all at once. And of course, with a small account, you're only piling, getting 1 or 2 contracts at a time. But you'll notice here that on this, it's like, okay, I got 1 contract here at $3.74. And then I picked up 2 more at $2. All right. And then I picked up this at 96 cents. But overall, it's just overall putting yourself in a positive position that way. I'll show you some of the indicators and stuff that I use as well. They're all available on most platforms. So first of all, why options? Because if you've traded options for a while, you're like, oh, why not options? But if you haven't, options are the best way I've found to grow a small account quickly. I found it's better than stocks because obviously stocks require a lot of leverage. Obviously penny stocks don't, so there could be an argument made for that. But I would argue that options give you a lot more choice. Better than futures, better than Forex, and better than crypto. Now I do trade futures, I do trade Forex, and I do trade crypto. However, again, if your goal is I've got a small account and I want to grow it, the easiest way to do that strategically is through options. So why is that? Well, every option trade you structure can have a fixed amount of risk of your choosing, with also a reward that makes the risk make sense. Okay, and you've got asset class flexibility. Guess what? Sometimes the stock market may be really, really quiet, but gold may be moving. Guess what? You could trade options on a gold ETF. All right. So the fact you just have a lot of variation, okay, in terms of asset class flexibility. And last, strategy variation. Okay. There's a lot of things you can do with options, but with this, you only need to do 2 things. You're either buying a call or buying a put, or you're doing a credit or debit spread. And that's basically it. And if you don't know what those are, that's something where I can teach you in 10 minutes. Because when I started options trading, I hated listening to people talk about, oh, we've got this mixed butterfly thing, and it just, it drove me nuts because it was so complicated. And so I've really taken the time to make it as easy as possible. And the thing about, futures and Forex, which again, I like, but they don't necessarily have fixed risk components. For example, if you guys remember when the Swiss franc decoupled from the euro, it gapped up the equivalent of $25,000 a contract. So anybody that was short got blown out. There was no stops, right? So that can happen in futures and Forex. And then crypto, of course, is fun. I haven't traded it in a while. Did the big run where there were some squeezes in Bitcoin and stuff like that. But you can only kind of trade it long. So Mark, you can set a stop, right? But in that instance where the Swiss franc decoupled from the euro, that stop was worthless. That's what I mean. Those are the horror stories that I hear from people. Now, of course, you could have done options on futures on that, and you would have been fine. All right, so why options? They're easy to understand, they're easy to use, and they do not require being in front of a computer all day. The strategies discussed offer extremely limited risk while offering great upside, and it's done in such a way as to eliminate negative surprises, which is the best way to grow an account quickly and consistently. You don't want those negative surprises. So the other concept in a small account that I think is important to realize, okay, is price targets are not as important as NLV management. Devin, it's a good question, but yeah, because a lot of this is less about the indicators and more about the strategies. So, and a lot of the indicators I use are on most platforms for this kind of stuff. All right, so price targets are not as important as NLV management. So what is NLV? NLV is net liquidating value, which is basically your balance. If you were to sell everything, that would be how much cash you have in your account. So one major difference of how I trade in a small account versus a big account is I'm not so keen on targets, on hard targets and hard stops, because instead of managing that one position, I'm managing my net liquidating value. Okay, so as an example of this, I bought these Roku options. I think this is at the beginning of January, and I bought them at $2.50. And when they got to $3.95, even though there was more upside, they were now at a point where they were taking up too much risk as a percentage of NLV. Like when it started, it was, whatever it was, 10% of my NLV. But when it got to 15% of my NLV, that's it. So you got to start scaling out. So there's hard and fast rules like that force you to keep your cash, that force you to avoid big drawdowns, that force you to manage your account in such a way that you don't have these crazy swings. All right. That's a large part of the key to this is just understanding those mechanics. Oh, that's awesome, Noble. That's great. How would you focus if you have to work full time? Well, the nice thing about this is that all these trades that I did in the small account, none of them are day trades. I did them while I was traveling. You don't have, you can set some alerts and things like that if you want, but you don't have to stare at the charts all day, and you can actually set exit orders. So here's a good example. Like on this, I could only have one contract in my small account. So even though it had a lot more upside, okay, I was targeting $138, it reached my NLV violation level. So it had to go. Okay, that's fine. I booked $638, but it had to go. So the nice thing about this is you're not really worried so much about that specific price target. You're watching your account NLV. So you actually set your targets based on that as well. So if you're working full time in the morning, you'd say, okay, well, if this gets up to $18, I need to get out based on this. All right, so NLV, which again means net liquidating value, which is basically your account balance. The secret to this, guys and gals, is active pruning, okay? Pruning, what does that mean? You trim by cutting away dead or overgrown branches or stems, especially to increase fruitfulness and growth, okay? Or as I call them, profits. So to cut back, like a rose, right? A professional rose gardener is continually pruning to allow the best bulbs, if that's the right word for it, to grow. And it's the same thing in your account. You're continually pruning, allowing your best positions to go while ruthlessly cutting back the diseased, damaged, dead, or non-productive positions, okay? And to me, that's defined by positions that aren't working after 2 days, okay? It's like they're diseased, they're damaged, they're dead, they're non-productive. Prune them mercilessly, get rid of it, okay? And it's a big secret to this as well. And reasons to prune are for improving or sustaining the health of your account, okay? So I think it's just important to keep in mind. A lot of times people really hesitate to take a loss when frankly it's your job, if you think of your account as a rose bush, to prune all the time. And now I want to emphasize that these results did not happen without any losers, okay? I lost money on ANET. I lost money on Tesla. I had a hedge on the VIX. I had a hedge on the Qs, which weren't necessary because the markets kept going up. I had a hedge on some options on the S&P futures, which weren't necessary because the markets kept rallying. But there are times when you want to have hedges, okay? So those are all trades that didn't work for me in January and February, right? It's not every trade works. I do like to structure 15% as low risk lotto trades. And again, this is I know, it's a simple option structure on this where, and by the way, none of these have really worked so far this year. So on this one, I made, I bought it for 28 cents and I sold it for, I sold it and made $300. Okay, that's great. I could have made $4,700 if it would have done what I wanted it to, but it's nice. A lot of times what happens is you structure these trades, you buy them at 28 cents and you sell them at 90 cents, all right? So you triple your money, but you have the potential for a 20 or 30 a lot trade. Now, I've done a couple of these this year so far, and I have had no big winners, okay? I'll get one this year, but I haven't had one yet. I've been buying these at 28 cents and selling them at 50 cents, okay? No big winners. But it's nice when they happen. I just don't have to plan on them because they're a bonus. Now, the other thing that's nice about this is that with ETFs, you get low implied volatility and cheap prices for rotational directional moves, okay? So for example, there's a specific strategy that I do in the spiders. And what happens, and I did it, I think, one time with the call and one time with the put so far this year, but you get the signal, you buy these cheap out of the money calls or cheap out of the money puts in this case, bought them for 34 cents, and 3 days later sold it for 85 cents, which is 150% gain. Okay. This is not having to do a lot of research. It's knowing what to look for and knowing where the liquidity is and where it's going to go. Okay. Not a lot of stress, right? So that's the kind of stuff that I like, especially in a small account. So, and this just kind of talks, this is just the text of that trade I just showed you, so no need to go into it. But one thing that's nice too is that, and I like to do this with live trading, is with SPX options, you can do these cheap plays on weekly expiration, and especially if you're at work, you can just let them cash settle. They'll actually close it out for you and cash settle it. You don't have to manage it, okay? It's a huge edge for small accounts, which is great. So another kind of concept here with small accounts is just don't be greedy. When you get the move into your low hanging fruit target, okay, which we set up based on a percentage of net liquidating value, you take the money and you move on to your next trade. Now, it was kind of painful for me to get out of Roku here because I thought it was going to $60, but it was more important that I follow my rules, okay? With small accounts, you've got to have your clear rules, and then from there, just follow them, okay? And that's about it. So on this one, great. I don't, basically almost doubled my money, move on to the next trade. And for these low-hanging fruit targets, I'm a big fan of the average true range, okay? And on this little tool here, it just shows me where 1 ATR is. That's average true range. And guess what? When it gets there, that's really all, it's got a 70% probability that when it gets there, that's the move. There's only a 30% chance that it's going to go beyond that. So with a small account, you're not interested in 30%. You take that 70% probability to the bank, all right, and you cash it out. Another tool here that I like, and it's very simple. It's just a weekly rolling pivot. That's the only thing you need on your chart. And if you get up to that weekly rolling pivot, you're out, because guess what? You can see here, Roku, solid move here, and it just peters out, right? That's just one of those things that the algorithms are looking for. So these are tools that are on anybody's platform. What I did is I just created a workspace in Thinkorswim to consolidate them. So, I want to see what the ADX is. Okay, there's the average true range. For me personally, I want to trade a stock that has a beta over 1. Okay, that's greater than the S&Ps. I like to know where the Bollinger Bands are. I want to know how far it is from its 52-week high and its 60-day high, because that generates momentum. What's the RSI level and the stochastic level? Are the moving averages stacked positive or negative? And then what are the VWAP levels and the weekly and monthly average true ranges? And then for options, and this is, more if you get a little bit more into it, I just want to know at a glance, what's the implied volatility, stuff like that. You do not need to know this stuff, by the way. It's just if you like that. But this is all stuff that's part of my checklist for doing this. Another example of a trade we did, Tilray. This is a fun stock to trade. And this was basically, I think it was my first trade of the year. And we had a very simple setup. And on this one, and from a percentage perspective, this was my biggest trade. But, I bought one contract here, and it was $5.37. I was able to get out for $27, so it was a 5-bagger. But that's the only really big trade I've done this year. Every other trade has been buying them at $3 and selling them at $4. Sometimes that happens, and it gapped up this day. Like I just woke up and it was up, $18. So that's great when that happens, and we'll take the money. And part of that, of course, is that we did some research and saw that it had high short interest. The other thing I like to do is just mix up the portfolio. Okay, you don't want to be totally correlated with the S&Ps. In fact, if all your positions are up on the day, you're doing something wrong, okay? Because that means you are counting on market direction. So if the market's up and all your positions are up, that's really not a good thing, because what would happen if that day Trump tweeted and the markets were down, okay? And so you can see here, we've got variety where some are up and some are down, but obviously you're trending higher, okay? We don't want to be so dependent on Trump's next tweet. We don't want to be so dependent on the news, and so we structure our portfolio in a way to deal with that. Another reminder for these small accounts is that big days are for selling, okay, not high-fiving. So when you see a big day, you take the money and you run, okay? All right, so we talked about that data already. We talked about that. So another part of this is just minimizing binary risk, okay? So what is binary risk? That just means that in a split second, you're either very happy or very sad. So I don't hold through earnings, okay? I minimize upgrade and downgrade risks through variety, okay? I negate dividend impact. I'm not gonna, hold an option on a stock that's about to have a dividend. And then I do have some simple filters to find good companies, so I don't have to deal with management ineptitudes, which lead to SEC investigations and things like that, okay? So at the end of the day, consistency is at the prom queen, is key. And in order to consistently make money, a trader has to learn how to create steady winners off their trading account, okay? Avoid the sucker bets that most traders unknowingly take and then lose money on. Know when to rotate out of your current bets and into new ones, and manage not by position target, but by your NLV, okay? That is the key. Most traders are tricked by the markets and financial press to get into trades that set them up to lose from the moment they get in. So if you've liked what I've shared so far, there are many simple ways to stack the odds in your favor, especially if you're trading a small account. Okay, and I'll discuss these in way, way, way more detail, as well as the 7 technical strategies I have narrowed down as my favorite for small accounts, as well as some scans that I wrote into Thinkorswim. None of these strategies require new indicators, okay? Many of these are the tools that I use for this. These are available on most platforms. So you've got the average true range, ADX, the Bollinger %B, basic moving averages, RSI, beta, VWAP, volume profile. And then I've got a few kind of custom indicators that I like, squeeze, RAF, 10X bars, but otherwise, you can actually just do it all on stuff that's already on your platform. So for these already available indicators that are on TOS like these, if you've got Thinkorswim, I'm going to go ahead and create some workspaces and things like that for a class. This is what they look like. I kind of like them with my own settings. I like that 60% channel. I like the structure of my volume profile charts in a specific way with specific settings. I like my VWAP charts with a specific way with specific settings. And it's all the settings that I've learned kind of work best. And I've also created scans to find small account setups that meet specific criteria, okay? So, so the nice thing about this is that these are great strategies for newer traders with small accounts looking to grow them quickly. The option strategies are safe. There's no naked selling or complicated rolling or defending or any of that. The option strategies have fixed limited risk of your choosing, all right? So there's no surprises, and you don't need to know much about anything about options in order to do this. You just need to understand those liquidity concepts. So goals of something like this is you've got to learn how to keep the money you make, all right? It's easy to grow an account and then lose it all. So keep the money you make, and then don't blow it this time, all right? So I'm going to do, so I'll give you guys a copy of this so you guys can, you can write down all the indicators and stuff. I'm going to do a full-on long class coming up on Saturday, March 9th, where I'm going to talk about all these strategies in detail. And I will give you guys copies of all the, everything that's with those free tools. I'll give you guys copies of those workspaces and everything like that. But in the strategy class, what I want to be doing is going through specifically the 7 strategies that I use to grow the account, okay, and specific ways to manage your NLV, specific ways to trade volume profile, to trade with the VWAP, how to set up your charts, why, what do you want to look for the ADX. So you'll just have a checklist of everything to do, plus the scans that I use to find some of those, okay? Now, if you're newer to options, there's a bonus with this. There's an Options 101 class that you'll get access to prior to this, done by Henry, and he'll take you soup to nuts through the basics of options so you understand all that. And as a second bonus, if you're new to Simpler, I'm going to do a kind of a prequel class to kind of get you up to speed on all the basic setups and things like that that I like to do. Also, for the first 250 people that sign up, I'm going to do a follow-up class a couple of weeks later after the close if you guys have any follow questions. Okay, so that's what that is. If you go to simplertrading.com/SAS, that'll take you to the page, and you can see all the information there and sign up for the class if you're choosing. Now, the pro version is fun because this includes live trading. Now, if you work full time, a lot of times people will do the live trading just so they can go back and watch the recording. And how we've set it up is if you do the live trading, you will get text alerts of the trades that we do. All right. So a lot of times people do the live trading just to pay for the class itself, because typically most of the time when we do a class, the live trades that we do actually end up paying for the class itself. So that's a bonus. Obviously, I can't guarantee that, but it happens. It's happened like 19 times out of the last 21. So the pro version, which is what most people end up doing, that includes the Saturday class plus the 3 days of live trading. Now, this time I'm going to do something different. I'm kind of added, we just called this Elite, but a lot of times what happens is we'll have 3 days of live trading. It's a lot of fun. It's amazing. Everybody's great. And then that first Monday, everybody's trading back on their own. It's like, oh my God, what happened? Okay. So I'm going to do something where we add an additional 2 days of live trading. Okay. So like 2 weeks later, 2 additional days. All right. And that way, you know, after that 3-day intensive live trading, we'll do another 2 days, a couple of weeks after that, and hit it all again and make sure you've got all your questions. Okay. All right. Now, so we'll go through these. I'm happy to answer questions. We've got, again, the bonuses here. There's a quick start class with myself and a new option, people that are newer to options. There's a course by Henry. That way, if you're kind of newer to options here, not a big deal. That'll get you up to speed. All right. That way, when you're in the actual class, you're going to be on the same page as everybody else. Okay. And again, for the first 250 registrants, we're going to do an additional follow-up after the class, after the close, for any remaining questions. Because what's going to happen is you're going to go through all this stuff, and it's going to be like, wow, this is great. And then you're going to be back on your own for a couple of weeks, and you might have questions, right? So I want to make sure that your questions are answered. So this, again, as you go through the web page, again, if you go to simplertrading.com/SAS, it's going to take you to the page. You can scroll down. You know, I've kind of gone through all this already, so I don't need to read all this back to you. But again, you get the strategies, the scans, the workspaces, all that stuff. That'll be part of the basic package, and you get those couple of bonuses there too, which is fantastic. The pro package includes an additional 3 days of live trading. I highly recommend that. You know, if you want to learn how to play golf, you've never played golf before, and you're going to play golf with your boss on Monday, or most golf courses are closed on Monday, so let's say on Tuesday. So you read the 3 best books on golfing over the weekend. You've got it down pat. You've memorized everything. Okay, and you get to the driving range. You've never hit a golf ball in your life, and you wind up on your first drive, you know, and how do you think that drive's going to go? Well, it's going to be terrible because you had a lot of theoretical knowledge, but you didn't have any practical mechanical training. And the live trading is for taking everything you're going to learn on Saturday, March 9th. That's a theory, okay, not a theory, but it's just, you know, it's bullet points and examples and stuff like that. And then when the rubber meets the road and you've got 3,000 stocks to choose from, how do you narrow it down to 3 stocks? And when you do, when do you pull the trigger? Where do you get in, and all that kind of stuff? And so that's why the live trading, I think, is great like that. And so a big question here is, will these tools work on my platform? Well, remember, any platform should have these tools. They're all pretty basic: Bollinger Band, ADX, ATR. For the workspaces I'm creating, if you want those, I'll be creating those in Thinkorswim. They could probably be recreated in, you know, TradeStation and things like that too. But an easy solution is, if you don't have it, you know, I don't work at Thinkorswim. I don't care what broker you use. I just know that you can go here to simplertrading.com/TOS, and you can open up a free Thinkorswim account at discounted commissions. And you can get live quotes. I think you can put like $100 in it, and it's not a cost. It's a deposit. You can take that money back. And then you can see all the quotes. You can see all the tools in case your platform doesn't have them, but you can still execute on your own platform. So that's kind of a nice little thing there. Also, I love TradeStation. they will actually reimburse the entire cost of this class through discounted commissions. So if you're interested in a TradeStation account, or if you have one and you just want to open up a separate account there, you can contact Kelly Lane and she will get you hooked up, which is kind of nice. And of course the elite package, and this is the first time we've done this, where, you know, if you want to go all in and do 5 days of live trading, so we're going to do the 3 days of live trading, the 27th, or sorry, the 3 days of live trading. I already talked about that. There was the 15th, 14th, 15th, 16th. It's the Wednesday, Thursday, Friday. And then we'll have 2 follow-up days at the end of the month to check in and see how you're doing, manage any existing trades, tweak what you're doing, and, you know, just kind of dive right in. So that's what we got there. So I'll leave this up and let's just see, you know, any additional questions you guys have. I'm excited about this. This is just going to be fun. This is really more about, you know, if you've done classes with me before, this will be the first time I've talked about things like the VWAP and volume profile. This will be the first time I've talked about things like specific strategies and money management techniques specifically for a small account. And also just kind of how I've curated all the data that I use so I can make instantaneous decisions. I don't need to look 10 different places for it. And then of course the scans that I've built to look specifically for trades that would fit these criteria. Yeah, so somebody just asked, okay, John, my gosh, that Saturday I'm going to be traveling. So when are you going to do this again? And the answer is I'm not. So this is the class that I'm going to do on this. And so what we do is that here's what I would recommend, because these are our, you know, these are our pre-live event prices. Once this goes into our store, okay, the class is over and this is going into our store, these prices go up dramatically. All right, so we offer a discount for people that want to actually participate in it, whether it's live or you want to get the recording, because after it goes into the store, then the prices go up dramatically. So I would recommend that if you are intrigued by the idea, at least lock in the price. You can always watch the recording later. Oh, so here's that's funny. So Saturday, I'm actually going to the Traders Expo. So Saturday, I'm going to teach the class. Sunday, I'm going to the expo. Monday night, I have a talk. I fly back Tuesday, and then we do live trading Wednesday, Thursday, and Friday. And then on that and then right after that, after the live trading, I'm going to Cayman Islands for a week. Because I'm sure at that point, I will want a rest. What if I'm a total rookie? If I'm a total rookie, then we're all screwed, right? I mean, it's actually a good question. I mean, I've been doing this, you know, stuff like this for, you know, I think online for 15 years and trading for 30. At least my first book out is copyrighted 2005. So at least it should show that I didn't start this yesterday. Oh, so good question. So a lot of people have asked that. So it looks like is that after the class is over, we're on our own. And I've actually thought of something where, you know, do we have something? I mean, we have our gold room, right? So we have a lot of people will be in our options room, and that's where they get continual, you know, ask questions and guidance. And, you know, we've thought about, and we'll just kind of gauge people on that Saturday and say, look, if you're interested in meeting more often, you know, maybe once a month for the rest of the year, we could put something together like that. And if people are interested, I just don't know if people are interested in something like that. But yeah, during that Saturday, March 9th class, we can talk about that and if there's some interest. And I mean, I get it. If you've got a small account, it's like, this is kind of, I understand how important it is. I mean, there's a lot of stuff tied into a small account, and, you know, in terms of like, you know, hopes and dreams of a small account are way, way different than hopes and dreams of a large account. And so my goal with this class is to kind of fill that void, and really just kind of take the experience that I've learned over doing this for 30 years and say, look, if I was trading a small account today, and by the way, I've got one set up so you can see exactly what's going on, this is exactly how I would do it. And this is different than how I'm trading my larger accounts, okay? It's just different. You know what, BJ? I think we're actually reinstituting the forum, as far as I know. How long is the strategy class? So the strategy class will be, we scheduled 4 hours. It might go a little longer if there's questions and stuff like that, but it's scheduled, yeah, for 4 hours. Yeah, and if you've got questions about it, of course, you can call us. So you can order this directly off the site. And here, I'll bring up the site here real quick, and you can kind of just see what it looks like here. And so if you see this, let's see here. If you see this, you'll go to the website and you can scroll down. Okay, so if you're like, oh great, I want that, pick the one that you want, and then it'll give you more information as you scroll down. Okay, and you can just kind of see, if you're kind of like, okay, I've got a few more questions and stuff like that too. And then if you go to simplertrading.com/SAS, it will bring you to this page. Oh, very cool, Sam. Yeah, no, Sam, it'll be good. I think you guys are going to really like this. I mean, this is more, and of course, if you've got a larger account, look, you're going to benefit from this too, but it's geared for a small account. It's like all the stuff that comes up around a small account, or any angst or suffering or anything like that. This class is designed to eradicate that. Yeah, if you buy the basic, you can absolutely get the recording. So if you are not available on March 9th, okay, if you're not available on March 9th, you can absolutely get the recording. So I'll put the dates here. So this is March 9th. Okay, it's a Saturday. And then there's a couple of different sets of dates for the live trading, right? So for the live trading, for the first part of live trading, if you're doing the pro package, that is going to be March 13th, 14th, and 15th during market hours. Okay. Then if you want to do the full on 5 days, we're going to come back and meet again a few weeks later, and that will be March 27th and 28th. All right. So full on March, just kind of taking care of it there. And again, with this too, you'll get the workspaces, scans, and just all those different, like the free tools there that we've kind of put together and kind of tweaked the inputs and stuff to my liking. I'll just gonna have all that for you. Yep, for sure. Okay, which option strategies will be taught? So the main ones I'm going to focus on are, I always like to keep it simple. So, and by the way, on nearly every strategy, you can just do a simple buy a call or buy a put, which is very simple. If you've bought and sold a stock or bought and sold a futures contract, buying or selling a call or a put option is exactly the same thing. And then from there, we're going to focus on one strategy above that, which is just selling spreads. And all selling a spread is instead of buying a call, you're just selling a call, okay? But instead of being a spread, just gives it limited exposure. So I know it sounds like, oh God, that sounds complicated. It's so easy. And once you understand the risk reward, you're just gonna be like, wow, why wasn't I doing this earlier? Yeah, and this is gonna be a great class. I mean, I know when something's coming up and it's gonna be like, what, this is gonna change a lot of people's lives. And it's just like, the aha moments and stuff like that. And that's the stuff that's fun. Oh, right. So the first 250 purchases, what we're gonna do is, I just want to make sure that you guys have everything you need. We're gonna do a meetup, online meetup, right? And it's gonna be in April. And we'll do it, after market hours, and to spend a couple of hours. Again, it's your chance to, like, all right, John, what about this? Why wasn't this working? What are you doing about, this? And it's, again, that ongoing kind of like, just so you fully understand everything. So yeah, I think it's good. I mean, it's one of those things where, I don't know if you've never done a class with me. I mean, I'm really good at this. I mean, I'm not trying to blow my own horn. It's just based on feedback, is that I can go through and show you guys examples in such a way that you're going to look at them and say, wow, that's great. Now, the first time I taught a class online, I wasn't that good, but since I've done them, I learned more and more based on feedback, how to organize the information and present it in such a way that it's just like, oh, okay, I just learned a lot, and this is going to help me quite a bit. That's awesome, Avery. That's great. That's my daughter's name too. Mark, in one of the slides, I saw a credit spread offset theta from a debit spread. So it depends on a couple of things. Sometimes it's just a long call or a long put, a lot of times, especially on the spiders. Sometimes we're trying to offset that premium decay, absolutely. Is this just training, not a trade along with John? So for the basic class here, this is going to be just, the basic class is just the training. All right, so again, that's on 3/9, and that's just training because that's going to be on a Saturday when the markets are closed. And then the here during this is 3 days of trade along, and then this is 2 more days of trade along. Okay, so those are going to be during market hours during the week. So and not a lot of people do this because I think a lot of people are nervous about trading in front of a crowd, but I'm obviously confident enough in these strategies that I have no problem trading live in front of a crowd. I just signed up. How will I know if I'm amongst the first 250 people? Okay, so we'll definitely let you know. I know it'll take probably tonight to kind of tally it up. And it's great because when you place the order, it's time stamped, so we know when you signed up. So you don't need to worry if you get in there. So, but yeah, we'll look at that and we'll let you know. Basically, it's well, I don't know if they're going to say. Well, I'll find out. I don't know how they're going to let you know, but it's one of those things where it's you'll at least know what's going on there. Okay. Does this strategy work in a down market? Yeah, believe it or not, down markets, they work faster. What am I doing wrong? Ask a question, but it only goes through. Harvey, it's just there's a lot of questions. So yeah, it's just kind of, answer one question and then it's just answering the next one that pops up. Video soon. Are there bonuses for signing up with Thinkorswim? So if you sign up with Thinkorswim, you do get, and if you go through, by the way, if you go through our link, you get discounted commissions on it too. So just so you know, and it's, there's no fees or anything. And that is just, okay, where do I write that? Simpler trading.com/toss. So for Thinkorswim, right? So that'll get you set up there, and then with that, you're able to get some of the bonuses like the workspaces that I've created that I can share with you, and the scans that I created in Thinkorswim that I can share with you, so you can run those during the day, or check them at the end of the day for trading ideas. Okay, I'm already signed up for TOS. Do they work well? Where can I get my account processed through Simpler? Oh, that's fine. So yeah, they're the broker, so you'll handle all your account set up through them. And then with us, once you sign up for the when we get there on that Saturday, we'll start giving you copies of the workspaces and stuff like that. And let's see. Oh, you don't need www anymore. Oh, thanks, Jan. Yeah, well, Jamie, that's great. If you already know about options and you know about verticals, that's great because then you won't need to do the basic stuff. This is really more about learning strategies specific to a small account and learning how to manage your account and your net liquidating value in a way to maximize a small account. So yeah, it's not stuff I've ever talked about before. Let's see. Are you doing anything with Tastyworks? I love Tastyworks, Ken, but we can't get our indicators on their charts. It drives me nuts. Tom has said that it's like, okay, John, I'm sorry, we've just got so much dev going on, and I get it. They got to build out a platform, but yeah, I wish. But I would love to have our indicators on there. Oh, awesome, Jeff. Cool. You also signed up for the elite. That's great. No, it'll be fun. I mean, it's gonna be a fun class. Would options trading be better for a college student like me rather than trading futures or Forex? So, Roberto, that's a good question. And I want to say there's nothing wrong with futures or Forex. It's just that, futures or Forex are going to require a lot more work, a lot more attention. And typically with futures and Forex, you end up not really, you kind of take the small profits, that kind of stuff. And there's a lot of risk. Whereas with options, it's a fixed amount of risk. So I like futures and Forex, but I would certainly encourage you to kind of understand, like, once you kind of start trading options, I get it. People are excited about crypto. I think options are way better. Do you go over position sizing and risk management as well? That's one of the actually most important parts. Yeah, we're going to go through the specific technical setups, but certainly a huge part of this is going to be position sizing specifically and risk management as well. I use Toss, but trade on Tasty. Yeah, perfect. Just signed up for the Elite Conference. Awesome. Oh, you're going to be great. That's great. Do you have a time for the strategy class on the 9th? I believe it starts at noon Central, Felix. And we started doing noon Central just because for people that were overseas and stuff like that, it seemed like it was a good, it's not a great time for everybody, but it's the best time for most, that if we're going to try to accommodate a worldwide audience. I already did the MTF class and Danielle's Phoenix class. Do I need this class? Prakash, I would just say if it rings true with you. Again, this is something that is kind of, again, showing you the actual results of what can happen when you apply all of this to your account. And, so if what I was talking about is like, what, that actually, it seems like that would, it's kind of like that ROI. It's like, okay, are these skills that when you learn them, you're going to be able to put to work and you're going to see that ROI in your account? And if my thought on that is that's the only reason I'm doing this is that because I know people want to be able to use this and have it work. And it's like, yeah, that makes sense. Then, then to me, it's kind of a no-brainer. Yeah, no, awesome. Hey, Pablo, yeah, good to see you. Very good. Very good. Well, all right, guys, it's about 8:30. I want to make sure I get all the questions answered. I will just again, real quick, first 250 people get that additional bonus of the additional session. Remember, this is on March 9th. This is going to be on the, make sure I got the right dates there, March 13th through the 15th. And then we're going to have March 27th and 28th. Okay, so if you want to do all of that, 27th and 28th. And then remember, we're going to have for the first 250 people, whichever one you do, a follow bonus up day after hours. Just kind of a bonus follow-up day, so we can kind of go through and just any questions that you have. You've got a chance to do this for a while, not just live trading, but really digging in. Like, what questions do you have about the tools? Anything like that. Oh, thanks. Awesome, Mark. No, appreciate it. Yeah, no, Delta, the waves are great. So I typically end up using the Porsche dots because they take up a lot less room. What are the two bonuses on basic? So the first one is going to be if you're newer to options, options 101 course, which is actually good because it really gets you up to speed, even if you've been trading options for a little while. And then bonus number 2 is kind of like I call it the new to simpler. This is going to be with me on Friday, the 8th. And we're going to be going through just kind of basic understanding of, hey, if you're new to simpler, you're new to what we're doing, this is kind of how I view the markets. This is how they work. These are the basic indicators that I like to use, like the squeeze and stuff like that. So you just kind of get up to speed on that. Greg, I'm really looking forward to this. You and your team have helped my trading so much. Awesome, Greg. That's great. Dun, dun, dun. That's great. All right, guys. Well, awesome. So I'll leave this up here. Again, just to sign up, all you got to do is just go here. We'll be tracking the people tonight for the first 250 for the bonuses. So simplertraining.com/SAS, and you can call us if you have any questions. All right. Otherwise, thanks for joining me tonight. I hope you guys I hope you opened up, had a few aha moments here. Obviously, some, volume profile, you can start using that tomorrow. If you think that's enough, great. But if not, I'm excited about this class. I hope you're excited about this class, that you can see the potential of what will happen in your trading after you take this class. And we're going to spend a lot of quality time together and knock this out of the park. Very good, guys. I will put the TradeStation contact up here real quick as well. Here, let me make a couple of notes here. I just saw that. I'll scroll up. And I'm just going to copy this real quick, and I'll put it on or right in here. There we go. All right. Good deal, guys. All right, guys. Have a great night. Again, looking forward to working with you on this class. It's going to be, I mean, I'm super excited about this class. This is kind of the class I'm going to show my kids when they're, old enough to start doing on their trading and stuff like that, because obviously they're going to be starting with a small account. And so I'm thinking of that while I'm putting this together, and just going to do the best job I can with it. All right. Yeah, and if I didn't answer your question, if I didn't see your question, apologies. There's just a lot, if you want to type it in real quick again. Rick just saw it up top. Yep, no worries. No worries at all. Can I see the recording of this class? Yes, there will be a recording set out a little bit later. Are the trades you're going to be doing in this training geared towards the end of the day? Not necessarily, but I won't be doing any day trades. Since it's a small account, you can't really do day trades. And if you have to work that day, you will get your you can get the texts. You can get them traded to you. Do you buy at the market or limit price? Always limit price. Yep. My goal sometimes is not to get filled. That means you've got a really good entry. What is their minimum amount? Well, I've talked to people that have started off doing this with $500 or $1,000. That's fine. I started off with $6,000. Oh yeah, sorry. Let me put that up there. Oh yeah, the TradeStation email is, it's right up there. That's probably the best way, frankly. Yeah, so we won't be doing day trading. Typically, like if we buy trades on Wednesday, some of them will sell on Thursday. Now we could day trade. Now, when I say day trade, I don't mean scalp, but let's say that on Wednesday, we buy some positions, and at the end of the day, one's really up big. Well, remember, you can do, I think it's 3 day trades a week in a small account. You get that penalty. But I actually hardly ever do them. Yeah, Joe, exactly. I mean, it's basically it's funny because the pattern day trader rule is a pain, but actually in this case, it forces a discipline that actually I think is helpful. And would you be offering this as a monthly subservice to give trade alerts? So that's kind of what we're talking about. We're not really sure. I'm going to ask on Saturday what would be some helpful follow-up. We definitely have like a gold room where we do trade alerts, but not necessarily, they're not all specifically like these strategies. So yeah, that's the stuff we're going to kind of talk about in the Saturday class. Sweet. Okay, guys. All right. So I will, again, let me just draw this right here. We're here at the office right now. So if you guys have questions, that's the phone number. And again, I'm just going to jot the dates up here again real quick. And this is March 9th. And then this is going to be 14th, 13th, 14th, and 15th. And this will be the 27th and 28th. And again, if you can't attend it live, you can get text alerts and things like that. And again, it's not like going to be day trades, so they're easy to follow along. All right. All right, guys. Well, again, thank you for joining me tonight. I think this is going to be a fantastic class. I'm super excited to share the information with you. Have a great night. Again, if you get the first 250 in there, I'll see you for that last April follow-up bonus. 250. And I think that'll be good. And other than that, I think we're all set to go. And yeah, you guys have a great night. For those of you, tomorrow's Friday, obviously the first day of a new month. Should not be dull. And looking forward to seeing you. For those that you guys that join, looking forward to seeing you on that Saturday, March 9th. All right, guys, have a good one.